In Florida, that's where we're based. Doesn't mean we don't have clients in other states, but Florida, obviously, and especially Orlando area, has a lot of businesses and restaurants related to that, service related or tipped businesses, as you mentioned earlier. So what is the new tipped employee rule and how does it work right now?
Yep. So I want to clear up, there's a little bit of confusion because it is the quote unquote no tax on tips or no tax on overtime.
Right.
Which can
hear people say that, but you can't just say that carte blanche because I know there's a rule. I know the IRS and I know they never do all together. There's got to be some kind of caveats within there. People keep going around saying there's no tax on tips. There's limits, right?
Sure, absolutely. Yep. So first, it mainly impacts the federal income tax.
Okay.
Not the FICA. And not only that, it's a deduction. So you still pay your taxes on your tips and your overtime on your paycheck from an employee standpoint.
Okay.
But it is shown as a deduction on the W-2 at the end of the year for the employee, and the employer can also take a deduction at the end.
So what you're saying is if I made $100,000 in the year, I'd show $100,000 for tips on there, whatever the tips were on there. But you're saying there's a special new line on the W-2, which will show a deduction then from that total amount of wages?
Correct. From what I understand, yes. And we're still all trying to understand the bigger picture of it as well. But yes, from my organization standpoint, what we do is first we help clear up that misconception. We've been getting a lot of calls of, hey, why are tips still getting taken out of my paycheck?
Right, of course.
So we help clear that up. But then also at the end of the year, we make sure the W-2s are accurate from a deduction standpoint, where the deduction is supposed to be on the W-2s, along with where the paperwork that we will provide our clients to then provide to their CPAs and their accountants at the end of the year to ensure that they get the deduction credit that the business deserves as well.
And what I noticed, we as a CPA firm, we always pay for our tax software up front, and we're paying for the 2025 software already. But I know the forms aren't even out yet. So I'm thinking, boy, I'm paying for something that's not even there. I bet the W-2s are the same way. They probably haven't introduced the actual official 2025 W-2 yet, have they?
From my understanding, there's still a lot of gray area around how that's going to look given the big, beautiful bill. So as we're getting information from the IRS, we're feeding it out as we're getting it. But to answer your question, yes, there's still a lot of gray area around the specifics of the W-2 and how it's going to look. And
as I understand from the overtime, we'll blend the two topics together a little bit. So the tipped employees relate to anybody who's in the service related industry. I think we called it tipped businesses a minute ago. And those are people that receive in addition to their wage. And some of them get a small wage. They're only making $2.15. And then the rest goes to tips unless it doesn't reach the minimum wage. Then they have to make at least minimum wage. So it gets a little confusing there. But the tipped employees, they have an exemption, I believe, or as you said, a deduction. Do you know how much that deduction is for the tipped employees at the end of the year?
Yep, up to $12,500, I believe.
Okay. So if they're making, again, earlier we were saying $100,000, then they're going to show on their W-2, most likely on line 1, the $100,000 or whatever line it is for the tips. Sure. But they're also going to receive another line item, which we don't know where it is yet, for the $12,500, which then I would then receive that as a CPA, and I'll take a deduction then on their tax return. And that's where we kind of work in tandem. And a lot of times payroll companies and CPAs work like that. They work in tandem together.
Absolutely.
You provide the info, then we take it from there. So tipped employees, $12,500. And then for overtime wage rules, do you know what kinds of employees receive that? Whether is it exempt, non-exempt?
So it's non-exempt employees. And my understanding is it is the customarily, hopefully I'm saying that right, customarily tipped organization. So what that falls into is, like we mentioned before, the restaurants, drivers, so delivery drivers, beauty supply or beauty services so people who, when you think historically, have received tips.
Right.
In these industries, not anybody new who's receiving tips or anybody who's decided to throw it into their business as of yesterday or last year. It's really historically the businesses that have been receiving tips up until this point. Now,
with the overtime rule for the non-exempt, so they're going to receive the same thing. Their W-2 should, again, we don't know yet, but should have that line 1 for the 100,000 in this example. Then they're going to have that deduction for 12,500. Sure. But what I've found, and I did a little bit of research on this as well, and again, there's so many pages of code to go through. that I always caveat that it's dangerous to give out that advice up front, because there could be page 625,001 could be, wait, ignore page 6,522, whatever. So what I understand is you get the 12,500, but just to make things more fun, because the IRS likes to make things difficult. And this is more on the tax side, which you wouldn't be involved in on the payroll side, because this is something that CPAs have to take account for, is there's a phase out. So what happens is if you're a single taxpayer, and a single taxpayer just themselves with not married, a single taxpayer, if they make more than $150,000, they actually get a phase out of that $12,500 deduction. So it's almost, hey, we're giving it to you, but they're slowly yanking the rug out a little bit, saying it's there, but if you make too much, we're going to pull that rug out right from underneath you. So it's, first off, like you said, everybody thinks all tips aren't taxed, right? They think, oh, no tip should be taxed. And then they find out it's a $12,500 deduction. So there's a, oh, darn, number one. And then number two is, it sounds like there is, I believe, a phase out. So if you make too much, you also can lose the whole $12,500. There's a phase out for $150,000 for single, and it's a $300,000 phase out for married individuals. Unfortunately, the IRS giveth, the IRS taketh away. That's just how they are.